For more, we are joined by Randall Kroszner. He's a professor of economics at the University of Chicago and also a former governor of the Fed. Randy, great to have you with us and to see you in person.
Great to be here.
Let me just bounce off of what McKee was just talking.
Sure.
Mike was just talking about, which is this warning by S&P. And Jim and I were talking about that earlier as well. What do you make of this warning?
Well, it's serious. I mean, the people in Washington have to get their act together, and they have to deal with the short-run issue of making sure that the U.S. debt can be paid off. But the much more important long-run issue is the one: can the longer-run debt be paid off? Do we have the wherewithal to do it? Do we have both the spending and revenue sides together
and do you think we
to make
do?
it work? Not yet. I think it's really clear that we're very far from that.
Jim?
Randy, one of the things that actually has just come out, particularly with the rating action, is what may happen in terms of the directly linked obligations that actually cannot hold D-rated obligations, and what the ramifications would be of that, which is something totally separate and distinct from whether or not they miss an interest payment on August 4th.
Sure.
What are your thoughts on that and the repercussions there?
We got to avoid that.
Yeah.
And I think we will avoid it. My guess is there'll be a lot of brinksmanship and sort of bring it right to the edge, but then something will happen. And it better happen, because otherwise there are very big implications, not just in the short run for exactly what you're talking about, but for the long run confidence in the U.S.
A lot of people look to the Fed to help stimulate this economy. We're just going to see QE2 end. Did it do what it was supposed to do?
Well, I think some people thought it could do everything, including cure cancer, and it really can't. The Fed is powerful in certain realms, but not in all realms.
Do you mean that the Fed can't create jobs? Is that what you're...
Yeah, what the Fed can do is provide the foundation for job growth. It can make mistakes that can lead to very, very difficult opportunities for growth, but it can't force the growth itself.
But during QE2, jobs, I mean, we pretty much stagnated on this jobless rate, though.
Well, we started to come back, and so I think what happened is, so I think the main thing that QE2 did was to try to prevent a Japan-style deflation from coming on. You have to remember last summer when the chairman started talking about this, inflation and inflation expectations started to come down very rapidly to dangerously low levels, getting Japan-like. And then the chairman said, we can do something about this. And he did do something about it with QE2. We started to see inflation come up a little bit. We started to see inflation expectations come back up, and now they're pretty well anchored at the long-run range where they had been before. So I think QE2 is very successful in taking out that tail risk of a Japan-style outcome, but it can't force job growth. It can provide the foundation for that, but that's got to be better business confidence. That's got to be better confidence about what the fiscal and regulatory situation.
And we were
in the
hearing
US.
about tax reform as well earlier from CEOs, but listening to what Brent Bernanke said at the last meeting when he had his press conference, did he close the door too much on QE3?
Well, I think he made it really clear that just a weak economy is not going to be sufficient for QE3. Because I think a lot of people thought, oh, weak economy, that's why we had QE2. I think really it was that we had the potential for deflation. He's not seeing the potential for deflation right now, and so I think that's why it's unlikely that we'll see a QE3.
Randy, let me ask you this. I want to get back to the budget discussion, the deficit discussion. When you look at what's on the table now, and at the beginning of the show I mentioned this to Betty, that I'm actually encouraged that they put sacred cows on the table: Social Security, defense, Medicare, Medicaid. What do you think is likely to come out when you throw everything in that mix? Some really significant adjustments there, means testing perhaps, or other things, looking at the tax code perhaps? What's your thought?
There are going to be some very significant, very, very significant changes, because we've now started to spend at a rate that is much higher than we had spent over the 50-year average, but we have been raising revenues above that. So we've got to see, are we going to be in a different situation where the government takes a bigger chunk of the economy, and if Congress decides that, the president decides that, we've got to do that, but otherwise we really need to try to pull that in, rein that in, to bring us back to where we were before.
Randy, great to see you. Thank you very much. Randall Kroszner, the former Fed governor and also professor at the University of Chicago.